Mortgage rates remained above 7% all week long, yet somehow we saw an increase in the number of people applying for mortgages and an increase in the number of pending sales both in Dallas and Collin counties. Overall inventory continued to decline, but new listings are looking strong again after a huge drop 2 weeks ago. This week is a holiday week, so don't expect a lot of volatility. It's the end of the year, and if you're looking to buy new construction in particular, now is the time you're going to see some of the biggest discounts and the biggest incentives, so you should be out looking. But the trade-off for that is you're not going to have that many options to choose from. We got the existing home sales report for October from the National Association of Realtors, or NAR, and we'll be covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is November 25th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. Okay, first up is market news. It's going to be a short one this week. Not a ton of news, but we did get the NAR, the National Association of Realtors, existing home sales report for October. So we're starting out looking at the sales, the seasonal adjusted annual rate of sales, and you can see from September to October, we had a massive jump up. This is how big of a difference mortgage rates getting down even just to, I think it was 6.11%. And it was very brief. It was like for a couple of days, and after that it went straight back up to 7%. And for reference, this low point back here, this was last October. So this dot is the same as this dot. So you can see just how big of a contrast those two dots are. That's exactly 1 year apart. The only difference is mortgage rates went down to 6.11 very briefly. Additionally, we saw the median sales price also climbed for the same reason. Mortgage rates were going down. We had a lot more sales, which means prices go up. And the median sales price for October was $407,200, which is an annual increase of 3.98%. So year over year, a 4% increase. And the most unusual thing we've been seeing in this market is just how strong home prices have been holding up, especially here at the end of the year when the market should be softening. Now, of course, this is last month's data. This is October. We're almost to the end of November. This data is always a month delayed almost. And especially since mortgage rates shot up and have just remained around 7% all month. For sure, when November data comes out, it's going to be significantly softer than this. But the only thing I really want you to see here is when rates got down, even to 6.11, we had a massive jump in the number of sales and we had a massive jump in the prices. So if you were needing any evidence that when mortgage rates finally do drop, prices are going to go up, there you go. If that's what happens when we get to 6.11 for a few days, just imagine what's going to happen when mortgage rates get at or below 6% and remain there, because that's where the real home buyer demand is. Which of course means your best move if you want to own a house will be to buy at the low prices of today and refinance to the low rates of tomorrow when they finally get here. You do not want to wait till mortgage rates actually get below 6% because you're going to be chasing prices up. And it's not going to be fun and it's not going to be worth it. You will have been way better off just buying now at the higher rate, refinancing later. Okay, that's enough of that. Like I said, no real market news this week. There probably won't be any next week either because it's a very slow week because of the holidays. But before we dive into the data, in case you missed it, if you are a first-time home buyer or an investor, I made 2 videos last week that you're not going to want to miss. The first one is a very unique community in Princeton, Texas, where homes start just under $200,000. And I know these look small on the outside, but just wait until you see the inside. This is plenty of space. You can get into one of these for just $1,500 a month. That includes taxes, insurance, HOA, everything. And all you need is about $7,000 cash because the builder is giving you a crazy low 4.5% FHA rate and paying all of your closing costs. And if you buy one of these, you'd be about 20 minutes to either McKinney or Wiley, but it's just super affordable. So if you're interested, make sure and watch this one next. And then the second video is just an incredible deal in fate, which is in Rockwall County, which means you have super low taxes and very highly rated schools. This one is the perfect starter home, as well as if you're an investor, this one is as big of a no-brainer as it gets. At 25% down, even at a 7.1% rate, you would only need to rent it out for $2,300 a month to break even, and this thing should rent for $2,300 all day long. Probably a little more, as it's a much nicer home than you'd usually find for rent here. So if you're interested in that one, call me right now because that one's not gonna last long. Okay, moving on, let's start with national housing inventory. This week we had a decrease again of 2,977 less homes for sale in the country. This keeps us at 27% more inventory than we had last year and gets us to a total of 719,055 homes available for sale in the country. And this same week last year, inventory was only at 565,875 homes, so still way better than last year. Then for reference, the all-time inventory bottom of 2022, we only had 240,000 homes for sale. Then the peak of last year, we had 570,000 homes for sale. And this same week in 2015, we had about 1.104 million homes for sale. So it definitely looks like mid-October was the inventory peak for the year, which means we are trending back towards a normal market. The last 2 years, inventory has gone up until mid to late November. But in a normal market, inventory peaks much earlier in the year, sometimes as early as June or July, as you can see over here. Now we're looking at new listings. We had another very welcomed increase in new listings this week. We are well above 2022 and 23's numbers once again. If you've not been following along, we started out the year looking strong, like we were tracking with 2022. All the middle of the year, we were having less and less new listings than we had in 22. And then finally, when mortgage rates dropped, they had that drop all the way down to 6.11. We saw a lot more people listing their homes. We had one scary week 2 weeks ago where we fell back below 22 and 23, but we're right back above that now. And this week, we have 53,220 new listings in the U.S. And of course, expect a huge drop in next week's data as this is a holiday week, but new listings growing has been the best news in real estate all year. Because the more listings we can get and the more inventory we can get, the lower the chance that prices are going to skyrocket again once rates finally do drop. Now looking at pending sales, 5 weeks ago, we finally broke above that 2022 line. We now have 12% more homes under contract than last year, so home sales are definitely growing even with rates above 7% again, and even having less people applying for mortgages than either of the previous 2 years. So we have less people applying, but with a much higher intention than normal. And as you can see, what should happen is we should just continue trending down through the end of the year. But this week we have 331,019 homes under contract. Then the last thing we cover nationally is the percentage of homes having a price decrease. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a very small climb this week up to 39.12% of homes having a price cut this week. But of course, we don't really care about 1 week data. We're looking for trends. And as you can see, this line has been trending sideways and downwards. So last year, right here, we got as high as 39.2%. The year before, we got as high as 43.2%. And just so you know, if you want home prices to come down, this number is going to have to be going up and not sideways and down. Now moving on to mortgage rates. As you can see, November 18th, we were at 7.08 and then we dropped to 7.03 at the end of the week. But what I really want to show you about this is today, the 10-year is dropping straight down, which means mortgage rates are going to come down probably below 7% today. So you can see here, this was our last close on Friday. That's what got us to the 7.03. Today, we opened up below this previous line we had drawn, and we are still dropping below that. So I would say very confident we're going to be below 7% today, unless, of course, this reverses. It is only 8:32 in the morning, so there's plenty of time for it to reverse. But seeing that it opened with this big gap down, that is a good sign for mortgage rates. Then looking at mortgage purchase applications, even with mortgage rates going up and being firmly in what should be a slow season, we did see a 2% increase again for the second week in a row in the number of people applying for mortgages. Now, like I said, we do have actually less people applying than we did in either of the previous 2 years, yet we have more pending sales now. So it's just a much higher intention when people do apply for a mortgage. But I've been saying this all year long. I still believe this. There's no reason to believe mortgage demand is going to grow significantly with rates anywhere near this high. The real demand comes in once rates get to at or below 6% for a sustained period. That's why new construction has been selling so much better than pre-owned, because that's what they've been offering for a long time, sub 6% rates. And now we have the evidence that even a 6.11% rate caused a significant jump in the number of sales as well as home prices. But I'm just telling you, you do not want to be in the market once rates get below 6%. I know that's confusing because in your mind, you're like, that's when housing will be affordable. It won't be affordable because prices will be going up. Okay, let's go ahead and move on to the local market data, starting with the MLS data of Dallas County. We had 401 new listings last week. That's 130 less than last week. 273 closings, 7 more than last week. Of the homes that closed, 43 were immediate sales, meaning they contracted within the first week. That's 2 more than last week. 251 went under contract. That's 8 less than last week. In total, there are 2,021 homes either under contract or in pending status. That's 22 less than last week. Moving on to Collin County, 345 new listings. That's 31 less than last week, so we have less listings in both Dallas and Collin County. 250 closings. That's 51 more than last week. That is a huge jump in the number of closings, but of course, that data reflects the mortgage rates of at least a month ago. Of the homes closed, 46 were immediate sales. That's 19 more than last week, of course. Once again, that's reflective of a month ago where rates were at. 147 went under contract. That's 1 more than last week. In total, there are 1,669 homes either under contract or pending. That's 57 less than last week. So we're having less new listings. We're definitely going to have less next week as well, but that's just because of the holiday. And overall, the number of homes going under contract is remaining about the same. Okay, I have some bad news. I just looked and the market action index, which is what we use for the rest of this video, has actually not updated for this week, which means we also don't have the top 10 ranked hottest and coolest cities and zip codes. So sadly, that's going to be it for this video. A very short one this week. Hopefully they get this data fixed soon. The only thing I wanted to add here on a personal note is I'm just one person, so take this with a grain of salt, but in the last week, I have had more people calling me both to buy and sell homes than I've had in many months. So I don't know what happened last week. I don't know if it's the start of a trend, but I just want you all to know it definitely felt like there was a shift last week, which is confusing because mortgage rates didn't drop. I don't know if it's because now the election is over and people were waiting for that, but if my experience is representative of what everyone else is experiencing, then it definitely feels like there was a shift and people are coming back into the market. But that's just 1 week with my personal experience, so let's wait and see. As always, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Thank you for watching. I'll see you in the next video.